Now, every Tuesday and Thursday, we are joined not only by Basil Chapman, we are also joined by Tim Ord of the Ord Oracle. If you are not familiar, you've got to get familiar. You can go to ord-oracle.com and check out what Tim has to offer. He has a newsletter, he has the book here as well. Additionally, you can go over to TFNN.com. And now that our domain name server is working, you can go right over to the services tab and get the secret science of market tops with Tim Ord and the 6 secret ratios every trader should know as well. These are fantastic. And, you know, I keep talking about that. I think we're getting to a point, Basil's saying digestive phase, could totally see that. I think there's so many people in the market that we might see some kind of pullback around the inauguration. I think it gives it kind of a good nexus point. Well, you can also check out this webinar, The Secret Science of Market Tops, and it'll tell you how Tim determines whether or not we're in a top pattern or we have more room to run. Tim, are you with us?
I am. For some reason, my camera's not working and I don't know why. So, worked yesterday, but now it's not. So
all the tech problems, right, Tim? It's supposed to make our lives easier, but it makes it always harder somehow.
Yeah, it does. So,
what are we looking at, Tim?
We got sound. So let's take a look what's kind of going on here. So we can go over to chart 1.
Yep, I have chart 1 up right now for us, Tim.
Okay. This is a lot of stuff is not really going on here. The market is kind of in the doldrums, but actually I think it's building some energy to get the next rally going. But anyhow, this is my what I call a panic indicator. Anyhow, panic always forms at bottoms, and there's different methods to find panic. You can use volume. I like to use a trend readings of 1.2 or higher. Is bullish. It shows panic. It shows volumes going in on the down stocks, and that's usually a bullish sign. So if you don't have panic, you don't have a bottom. But anyhow, the bottom window is the 3-day average of the trend. The next higher window is the 2-day average, and the next one above that's 1-day average, and the top window is the 10-day average. And as of today, we're coming in right around 1.109. Yeah, I like to see the 10-day up around 1.2. You know, so we're leaning bullish, not ideally bullish, but we're kind of into the holidays too. So some of the energy, I guess, volume is kind of out of the market right now. So I'm not really thinking that this is a top of any consequence. The reason why, because the 3, 2, and 1-day trend did reach bullish levels here several days ago, going into the recent high. And since then, the market is kind of backed off of the last couple of days. We're off about I think 0.42 yesterday. We're off 0.37 right now. We did test the gap on lighter volume. That's usually a bullish sign. But anyhow, this chart 1 here is leans bullish, I guess. It's not really bullish. I think it'll need a minor pullback to get the trend up. And I notice the trend right now is coming in at 1.13, leaning a little bit bullish. So let's flip to chart 2.
Sure.
So chart 1's really not saying anything real bearish, but it leans bullish. It's about the best thing you can say about it.
Right.
This next chart looks at the little bit bigger time frame. The bottom window is the VIX. Next higher window is the SPX VIX ratio, and then one above that is the weekly SPX. And we did have a bearish divergence started back in actually August, September of this year, where the S&Ps were making higher highs and that ratio is making lower highs. And I noted that with a light pink area. And I thought we were getting a pullback possibly into the election. That's what I thought was lining up here. But turned out not to be the case. We kind of kept on going higher. And finally, the times we noted in green here over this chart goes back a couple of years where it's a bullish divergence where you have the S&Ps basically matching its previous highs and the ratio is making higher highs.
Right. And
that's a bullish sign suggesting the continuation of the rally. And so we kind of went to bearish to bullish where the S&P started making higher highs and its ratio also started making higher highs. And that's to the far left here. So that bearish divergence flip didn't work. flipped back to now we're actually bullish divergence. And if you look at the bottom window here, the trend's really low. It's around 14. Normally you get around below 16, 17. A lot of times that's kind of a trending market. So I'm thinking we're probably, even though we'll see some minor pullbacks, nothing, I don't think, is in the cards for a major pullback here. I think it's kind of a doldrums. We may drift lower for a little bit, then probably turn around and drift a little bit higher. But intermediate term wise, this chart looks good. Not every day is going to be an up day, but there's nothing in the cards here for a major high forming.
Okay.
So either the trend's not ideal, but again, you get the holidays, you get the VIX bullish divergence, showing higher highs along with the S&Ps. So let's flip to the short term.
Yes.
Which is chart
3 we got up.
3 here, kind of seeing where we are. I have a top one. I got a blue shaded area on top there, the blue circle, and that's kind of where we are right now. And I wanted to show you, I have some dotted trend lines, or dotted up and down lines going through there, and we had a gap. I kind of pointed out that gap, and we're actually through the gap a little bit today. But normally you can test the gap on lighter volume, which we did yesterday, significantly lighter. That's usually the gap has support, and we kind of passed through it today. But ideally, we'd like to see volume lighter today than yesterday. If that's the case, then this is just a mild consolidation. And also, I pointed out on the chart, in red, I have the trend and tick readings. This is basically late December or late November, early December. I pointed out the ticks and trend readings close of those days, and we had panic in the ticks, and we also had panic in the trends on those couple of days, all right around that 600 level on the SPYs. So I thought we may pull back down to that support, which is also the previous highs of early November. So we got panic as we busted through that line, which is at 600, which is bullish. That's what you want to see, panic through a resistance line. And sometimes you pull back to it, and you should start seeing panic again as you approach that 600 line. And panic again is the trend up around 1.2, and trend readings minus 300 or so. And if you look at the trend and ticks right now, we're minus 247, which is leans bullish, and we got a trend 1.19. So we haven't even quite got there yet, and we're starting to see panic. So this is a mild consolidation and an uptrend.
Fantastic. Well, Tim, stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle right after this break. Welcome back, everyone. We are joined right now by Tim Ord of the Ord Oracle. Again, strongly recommend checking out ordoracle.com. That is ord-oracle.com. You can check out his newsletter and his book there. And additionally, you can go right over to the services tab of TFNN.com. Talking a lot about, are we in the top right now? What's going on? Check out the secret science of market tops. Of course, Tim, what you're saying is look like we might be in a minor consolidation phase in a bullish market right now.
Yeah, that's what is showing up. So anyhow, that's the equity market. Let's take a look at the gold market.
Let's do it.
This is an interesting chart, chart 4. This chart goes back to, looks like about 2000. And so it's a little bit messy, but anyhow, this chart, you have some circles on there. The blue circle is the 16-year cycle for gold, and the red circle is the 8-year cycle for gold.
Okay. And
it works out pretty good. Both cycles bottom back in the 8 and 4-year cycle, bottom back in, looks like 2000, 2001. Next time they bottom in 2016. Excuse me. That was a big rally, and we had another one recently, and actually it was due in late 2023. Actually, it came in about March of this year. Depends how you want to do it, but anyhow, the eight-year cycle is the bottom now. So now we're going up into the top of the 8-year cycle, which comes in, if you look at the top window there, September 2027. So if the cycles work out right, this rally may last all the way into September 2027. So let's wait and see if that works out or not. So I'm not a big cycle fan, but I like to know what's going on and where they
Sure.
are. And in general, they don't pinpoint the exact lows, but sometimes they come pretty close.
Right.
So, but anyhow, this is back in a bull phase all the way into mid 2020 or September 2027. So we'll see how. We'll talk in 2027.
Yeah.
See where we are. So, but on a shorter term basis, I flipped to chart 5.
Sure.
And this is keep showing it because it's relevant. This chart goes back to 2009, and the bottom window, I think the last time we showed this was our last update or our last show. But is a monthly cumulative advanced decline. That's on the bottom window. The top window is the cumulative monthly up-down volume. So these indicators trend both the advanced decline and the up-down volume for GDX. And markets trend a lot. And so you really need indicators to look at the bigger picture. You need something that trends. You can do price trends, you can do advanced decline trends, and volume trends. So I like the volume and advanced decline trends for GDX because that seems to work the best. We got a buy signal. I think it was eyeball in there. It looks like either March or May or June of this year. It flipped above the mid Bollinger Band, and that's how that signal's triggered. And both indicators triggered. Signals of this type last a minimum of 1.5 years. Could last all the way out to 2027. Yeah, it's a possibility because you can see some previous cycles. If you look at the cycle top back in late 2011, market went from late 2011 all the way down to 2016. So that was, a 5-year decline. Then he had another bearish decline started in 2021, the last 2024. So that was a 3-year decline. The advancing ones that so far haven't really lasted that long, maybe a year and a half to a couple of years. So we at least got another year to go on this advance at a minimum. Could it extend all the way out to 2027? Yeah, because if you had 3 years, 2024, so you could get out to 2027. I think there's a good chance you could do that on this rally. So I think this rally is going to be lasting because a lot of these gold stocks just totally got the crap beat out of them.
Yes.
So normally when that happens, you're in for extended rally. So I'm thinking this rally is going to be I think there's a good chance we possibly get to 2027. The worst case scenario is November, December of next year. So a minimum a year and possibly 3 years.
Okay.
So let's take a look at the short term, see where we are. And I have some other indicators to give buy signals on a short-term basis, but this signal, the bottom window, is the 18-day average of the advanced decline for GDX. Next window up is the up-down volume 18-day average. So it's not a cumulative. It's just advanced decline with an 18-day average. And when both those indicators get below minus 40 on November 15th of this year, both the bottom indicator got to 42.45. Next higher indicator got to 48.45. That marked the bottom. And these indicators, even though kind of they're short-term oriented, usually they're multi-week, if not multi-month. You can see the last time we got a buy signal on this indicator came in early in 2023. And so it did give a sell signal, but I didn't have that shown. But anyhow, these are usually at least multi-month signals. So I'm thinking another rally has started, and I think we'll go well into next year. A lot of times March, for some reason, is a seasonal high or low. So at a minimum, we should rally into that time frame. I think we could possibly do more. But a lot of these signals, when they generate, if you notice, there's a big surge in price. If you look at the last 4, you kind of had a surge in price.
Yes.
So far, the surge in GDX is not, even though it came off the lows here, we haven't seen the big surge yet. I think that big surge is probably coming here pretty quick.
Yeah, it would be fantastic. And you're right, a lot of the miners just got kind of hammered So it'd be nice to see these guys kind of, surge back up, to what traditionally happens. Tim.
Yeah.
Yeah.
So.
Well, I appreciate it so much, Tim. Having you on is always great. These insights are fantastic, genuinely. Again, if people want to get better access to what you're talking about, they can go to ord-oracle.com, check out the newsletter, check out his book, and then additionally, 2 really fantastic webinars. And Tim, we got to talk about getting another one coming up or something like that, because people love these things. So, Tim, thank you so much for coming on. We're going to see you Thursday, all right?
All right. Talk to you then. Thanks a lot.
Fantastic.